agreement being pretty much done, I think. Just a matter of them. All right, there you go. Somebody took advantage of it. Yeah, so I forgot what I was saying. They got a lot of snow out east there. It's kind of, like I said, it's pretty for a day. Then you got to clean it off, and then we have a whole bunch of trees in our neighborhood, and a couple of years ago, we had a nasty little storm coming through, and so I went out and I drove. I think I was still, we were driving to work, and I was driving to work really early in the morning, and the snow was just, they didn't, it was trees, it was just gorgeous. It was just beautiful. The drive took me about an hour and a half to get to work, but hey, what can you say? I'm still here. All right, market is kind of on the lows again. If you did trade our blue band pivot area there, coming down. The French president Macron has tested positive for COVID. It's not a good thing these days. This vaccine has not come fast enough. So I wonder if you had COVID, do you still take the vaccine? I guess you could, right? I mean, I guess you could. Let's say you had it, you recovered. It's like maybe a month or two later. Do you still take the vaccine, or do you have to take the vaccine? I guess. I don't know. They're going to make it. The Republicans are going to make it such a, you know, a retaliation thing because of their holy leader. So, who knows? Anyway, it's his son, right? I mean, so he's responsible. If he did something wrong, he'll do what he has to do. All right, we're on the lows there, looking what is it, 04? Support level down at 04. So today they have another Moderna, I think, is going in front of this panel to determine whether their vaccine is safe, and it seems like it's going to be safe. It's the same type of efficacy rate, and this one seems to even be better because it stops you from even getting the COVID. The other one doesn't stop you from getting COVID. I guess it just minimizes. I don't know what they do. Whatever. But the point is that I mean, even you get a flu shot, you can still get the flu, but it won't be so bad, right? I think that's the first one that they're with. This second one supposedly is supposed to not even let you get the COVID. So So they think that one will be okayed. And then there's another one down the pipeline, another vaccine with another company down. So that should get supply going. Right now, there's not enough supply, obviously. But again, it's just a matter of time. And the quicker these things that happen, I think the better it is for stocks. And that's why the market's on these highs here. They just are looking forward-looking type of bunch here, as we're getting a triple, double bottom there at 30.07. So trying to see if it wants to bust through or not. 04 would be the next support level. 03 so it was our blue band in our hourly. Remember yesterday we got a little bit of help there from the bond market. The bond market rallied and allowed us to break a little right into our support level. All right. Anybody have any questions? And welcome to some of the new folks that are coming in. We are trading mini S&Ps here. We're trying to find opportunities to scalp the market. We don't believe the markets go straight up or straight down. Consequently, we're looking for those inflection points. We gave out the levels this morning right around the opening. If somebody could print them up or put them in a chat box area. If you bring up your chat box area, the levels are in there. Those are levels of support and resistance areas that we found. We did go up to our first resistance area there at 17 and broke off very nicely. Market's coming back down here, kind of floating around, looking for the next support level we have is down at 04. That's the one we'll be trading. Like I said, the 03 is support there in the blue band in our hourly. So in case you're looking for a little extra reason. Who's paying for the vaccine? Government's paying for the vaccine, actually. They've already paid, given down these billions of dollars to these drug companies for figuring it out. The drug companies are charging them like $20 a shot or something. So when they order 1 million or 20, they're already paid. They're already paid off. I think every country invested in one of these want the multiple companies to come up with the vaccine so that they can come up with they can give it to them right away. Like we got Pfizer, we paid them. We said, okay, if you get it, we're first, or you're going to give us a certain amount, and then they didn't want to order more, and so now they're backlogged. At least that's what I hear. Of course, it's us who pay for everything. I mean, just because the government pays doesn't mean we're not paying, obviously. But at least you know what your tax. This is a good thing that your tax dollar is going for. God knows what are some of the other things that are getting done that we don't know about. I mean, considering this is a pandemic, is at least the one thing that we are, at least we know where our money's going. At least that's okay by me. There's a lot of other stuff that's out there that have no idea what's happening with our money. So that's another story, but let's not go there. Pelosi said progress made this morning on stimulus talks. So She is all happy and gung ho about it. I'm trying to down tick here, get support down here at the 04 area. Again, could you have gotten short? We talked about earlier. If you wanted to get short, you had to be out of any shorts at 13, 14. So that was one. Then we had a nice rotation back here to our pivot just a little bit ago. Uh, could have gotten short there if you wanted to. Any trades that we put on, or any reason that you put on a trade, I should say, uh, we uh, we encourage and we talk about in our education course that you should have a reason to trade that level, or a reason to get in. If we're looking to be short, then you need to find your exit strategy. And again, we're keeping it to 2 to 3 point stops these days because of the volatility or lack of. Obviously, when it gets a little bit more busy, there's more opportunity. Plus, also, our stops have to be increased a little bit because there's going to be a lot more slippage in the market when there's more volatility and more people are trading and more volume is out there. So, but right now, as you can see, the ladder ticket has 200, 300, to mostly 200 up and down the ladder ticket. So it's not too bad, and that's pretty solid market right now. So it's not gonna run away. But when you get less than 100, then the volatility, you can always kind of read what the volatility is by looking at how much is stacked up in the ladder ticket. So that's what's going on right now. And so again, if anybody has any questions, please feel free to ask them. Put them in the chat box area. That'd be a good place for me to see the question and answer it right away. The green band is holding. Yeah, it is. I mean, just 05, we were looking, got down to 5.25, and popping back up here a little bit. I mean, if you were going to do the green band, you were going to have to do the 4. You were also going to have to do the blue band and the hourly. So there was a lot of support, a lot of support in these little areas here, and we like to find layers of support and or resistance depending on the situation. So if I mean, we're not just finding areas of support and resistance based on a little bit of work. We have backup levels that support the area. So, I mean, obviously, if you did the 5, you would have to do the 4. You'd have to do the 3. So you're scaling in, is what I'm saying. What I'm trying to say. What is the pivot based on? Well, um, well, it's not any kind of equation or anything like that. It's something that we came from using the floor as a pivot that we use on the floor. That's what I used to like to call it, and it's something that we've been using for since forever, and that's what we kind of try to do. with the pivot. So it's something that we like to show our clients who've taken the education course. It's not a secret. It's just something that it's not either. It's not one of those equations that you figure out either. So yeah, the green band did hold there. Obviously, like I said, you'd have to do all of them. Between micro and mini, well, if you're gonna, the micros are okay, but I mean, if we're gonna trade, you should want to be able to trade. And micros are all right, but you're not going to be making much money off of those. I mean, especially when there's not that much volatility. You need you need the market to move around a little bit, and then you could, probably make a little bit of money in the micros. But you know, yeah, the fees are also not, again, keeps you. I mean, they're okay. I mean, it's just the fees are going to hurt you there in the micros. That's all I'm saying. It's just, if you're going to trade, I would suggest that you. Yeah, they're very the you can, the fees just kill you in the micros. I mean, you're making $5, even if you get dinged for $1 or $2 or $1.50. It's still what, 30%. You know, if you make if you trade a big one and you get charged $4, but if you make $50 a point, that's, what is it, 8%? So 30% versus 8%. I mean, over the long run, if you're going to trade, micros are nice. And again, if the market is moving around and you're looking at 10-point stops, maybe I would consider it, because at least you're trying to get more than 2 points, 3 points out of it. But they kill you on the commissions or the fees there, no matter how you slice it. It's tough. It's tough if you're trading the micros. But again, it could be a place to trade if you are looking for if you're looking for when there's some volatility. And then it's a false way to trade if you're starting out and you think you're doing bad, because you're making a little bit of money, but then all of a sudden the commissions just eat up most of it. So even if you think you're losing money, you're not, because commissions are part of that loss, and that wouldn't happen in the big ones. So I understand if you have your account is a problem. So, but it's definitely not. It's not advisable if you're going to trade this stuff. Trying to get over the fear of trading. Yeah, well, that is a problem that everybody has, right? It's not just you. It's what we try to do here with the work that we do is we try to take that nervousness, or we try to give you more confidence in entering your trades. We try to give you reasons why you should be trading. And if you get those reasons and you feel comfortable with them, and you find a trade that works for you all the time, and you feel comfortable taking it, then you should take that nervousness or fear out of the trade, right? And that's what we try to do here with the work that we try to take the fear out of entering your trades out, and you get confidence in trading, which is probably 80% of the problem of most traders, right? I would say that you can recognize the trade, and then the execution part is the tough part. So we have two parts of trading: recognition of the trade, which is recognizing the setup, which is, we work on in our course. And the hard part is how you execute it, right? How you enter your trades, how you get out of them, what you're looking for, how to stay in your trades. All of those things come into play, and everybody's different as far as all those things are concerned. Everybody has different risk tolerances. Everybody gets scared or the fear is there, right? So that's what that's what they're there for. I mean, that's what makes the difference between traders all over and every level. Is how much confidence you have in what you're doing, in the methodology that you are using, whether it be your own or somebody else's, or how you incorporate your own methodology with somebody else's. And again, there's nothing wrong with like learning different kinds of concepts out there, because that's what we do. That's what traders do. You talk to each other, you learn different ideas. There's plenty of money to be made here with everybody trading. There's not like, oh my God, I can't, if he's making all this money, how am I going to make it? It doesn't work that way. There's plenty opportunities here for everybody to make money. So it's just a matter of understanding, each individual's risk tolerance, which is what I talk about all the time. And once you figure out your risk tolerance, then you adjust it to the market, and then find the 2 or 3 trades that work for you. Yeah, but it's not a matter of your losses being small. It's a matter of you making money. All right. I mean, it's okay to lose money in a trade, because you're going to be making money eventually over the long term. Like, if you have the confidence in making money, then you don't have to trade the micros if you're confident in what you're doing, and if you stick to something that's a system that works for you. But the problem is, when you make money, you're not going to be making much money either. So I'm not saying that you shouldn't be trading in micros. I'm just saying that it's maybe a good place to learn, but I think if you're going to make real money, you need to get a hold of your fears and feel confident in what you're doing, and then obviously trade the minis. I mean, think about it. Those guys who trade the big S&P, $250 a point versus the $50 a point. That's talking about losing less. Yeah, that's a big jump. I think that's why they came up with the minis, because for that reason, because it was a big play. But yeah, I mean, and people were trading a whole bunch of size. I mean, with the big S&P, so you can imagine with the money that was being swung around, right? Do you think the market will break down? If we go past it, yeah, there's a lot of areas of support on the way down, so I don't know how much it's going to break. If you ask me, I don't know. I can't tell you. I don't. Again, if Washington there's words out of Washington in regards to the the stimulus thing. If that keeps positive news keeps coming out of there, it's going to keep the market a little bit to the upside. I mean, I think the market is expecting it. So, how do you trade the big S&P? Well, you actually have to trade it in the pit. That's a pit trade, and also, if you wanted to trade it, you'd have to trade it through a broker who calls the floor, who uses a trader in the pit who will execute the order for you. So the old-fashioned way of putting an order in on the through the desk on the floor, and that person transfers your order to somebody in the pit, and they make that trade for you with another trader. That's how you would want it if you wanted to trade the big S&P. And now the big S&P only trades from 8:30 to 3:15, and that's why we kind of open up when we open up here at 8:30 is because we're piggybacking the big S&P, even though we're open up all night. But yeah, If you wanted to trade the big S&P, that's where you would trade that. And they kept the big S&P around because of the hedge funds that hedge institutions that hedge their portfolios, right? I mean, if you're hedging, you know, a $1 billion portfolio, you know, it's much easier to do it in the big S&P than it is to. You have to trade 5 times as many contracts. So if you're trading 1,000 lot there, in the big S&P, you'd have to trade 5,000 lots in the mini. So they keep the big S&P pit there open so that you can hedge yourself against, you know, so the institutions can have a place to hedge themselves without, you know, showing off their position in the mini. And it's harder to fill something in the mini than it is in the big. So the big S&P leads the mini. Not necessarily true. I think that the mini kind of leads because there's more people trading it and the volume is greater. And so, again, like I said, they use the big for hedging. So if a big order comes into the big, usually the traders will hedge it in the mini because there's not that much volume in the big. That's what happened in the bond market. You know, we used to trade. An order would come in the bond market, and we would hedge ourselves or arbitrage. I don't know if it's a hedge is right, but you would take the other end of it on the electronic platform. So, you know, I had to keep. So I would I had a clerk who took care of my orders. Plus, I also had another clerk who just did my electronic trades for me. So I would, let's say I buy a 10 lot in the pit, and I would sell a 10 lot in the on the screen. So I arbitrage between the two. It comes out a wash at the end, but I would be long 10 on the you know, in my position in the bigs, but I'd be short 10 on my computer. And so my two clerks would match up. You know, she would keep tabs of my position in the bigs, and I mean in the bond pit. And so if I was long at the end 120 bonds, I would be short 120 on the electronic screen. So I'm flat. So they use it to arbitrage between the bigs and the minis. So, but most of the traders there in the big S&P pit are hedging themselves in the mini. I would think, be smart to do that. So stocks go down, S&Ps goes up. No, not necessarily. Remember the S&P. It's the S&P 500, right? So S&P 500 means 500 stocks are indexed into that number. So when you get the S&Ps there, that's what you're looking at. If you want to take, again, the same situation here with the short up here is that if you get above 14, you want to be out of any shorts. So the same situation we had before still applies if you're looking for a short here. So we went down to 05 area instead of the 04 area that we had, and then bounced back up here. Again, it's very tight little range, but it is what it is. So yeah, so the question is, it's not necessarily that the stocks go down and the S&Ps go up. Usually, the stock market will follow the S&Ps, maybe not exactly the same. Only because the S&Ps are 500 stocks. It's an index of the 500 biggest, or whatever their criteria is, right, for putting them in the S&P 500. So they try to get a good overall feel for all the stocks, different industries and different areas that are represented in the S&P. So you would think that it would follow, but not necessarily. Sometimes there's diversions between the cash market, the Dow number, and the S&Ps. So if you're trading the Dow, which is the Dow index number, right? The Dow contract that follows the Dow that everybody hears about, 30,000 or whatever it's at, and then the S&Ps, right? So usually, if you watch both, a lot of times the Dow and the S&Ps will kind of mimic each other. If you put a Dow chart over the S&P chart, a lot of times they kind of mimic each other. But there's always, once in a while, there's going to be diversions from that, and um, it'll divert because some other stock that's not in the S&P is moving more and creating a bigger, giving that index a better number. So why and when are hedge funds hedging? Well, hedge funds, you remember, and I remember that why did we start futures in the first place? And the reason that we started futures trading in the first place was so that the farmers could hedge their grain prices in the winter because they don't have a harvest, and their grain prices in the winter would be higher than it was in the summer. So they would go and sell their contracts in the futures market and get $4 a bushel per corn or whatever. And when the harvest came in the summer and the market was trading at 350, well, they already sold their corn or soybeans or whatever at $4, so they guaranteed they'd locked in a price. If the price went up during the summer to 450, they still are gonna they lock in their price at $4. That's what they wanted. They can take care of their farm. They knew what they were going to get no matter what the price fluctuation was. Same with stocks. These stock company, these hedge funds are in a whole bunch of basket of stocks. They're hedging themselves against market fluctuations because whatever. So they can sell the S&Ps if the market goes down, or if they're short in their hedge funds, they can buy the S&Ps. So the futures market is there to hedge against market volatility and against their position. So if you can take that concept of the farmers to stocks, and you can do the same thing with interest rates. That's why the bond market started when the interest rates were crazy in the 70s, late 70s. You had the bond market that came into play, and that hedged against mortgages that were priced in. So the mortgages were priced in at whatever rates they were. If you wanted to lock in a rate, these banks put together $1 billion worth of mortgages because they bundle them, and you want to lock in a certain rate because you want to lock in a certain profit to the whoever's putting in the money. That's what you would do. You lock in a rate and you hedge yourself in the bond market. So hedges are out there to protect or to guarantee a rate, to guarantee a price. They're always out there to do this kind of stuff. That's why futures markets are out there to begin with. And it picked up steam when more money came out, and people wanted to protect themselves against the market, whatever market you're in, whether it be the grain market, whether it be the financial market, whether it be the equity market, whether it be the currency market. You hedge yourself against moves, and other people, like some of these other firms, the bigger firms, use it to make money because they know what numbers are, and they can relate to, and they think they can figure out where the economy is going, and they can use it that way. So there's speculators, and there's hedgers, and there's the farmers, and there's everybody that's out there. What does that mean? Come out? Well, how do you know they've come out of the E-minis compared to years past? I think you had a banner year this year with the volume of the E-minis because of the volatility that happened in March. Those crazy stuff that was going on there. So it's all cyclical. You need some volatility in the markets. Every time you get volatility, where would you come up with that scenario that come out? Who told you it came out of the? Where'd you get that stat? All right, so if you did sell this again, we told you about 13, 14, come up to 12 here a couple times, giving you a chance to do a little tight scalp here. If we don't get below 08, the market might want to rally here, especially if we get above 13. So again, if you were looking to a little bit of a scalp here, we told you where your exit strategy was. It's held. If it holds here above 08, I think we might go a little bit higher. No, that's not necessarily true. I think E-mini is trading a lot more in recent. Now, I don't have the stats for it, but I think definitely a lot more recently than 10 years ago. I would think. Yeah, we had. You have to remember that during 07, when that stuff happened, you know, financial crisis. If you got a 30-point move in the S&Ps, that was huge, absolutely huge. 40-point move. Once the 07, 08 started, and we get those crazy 500 Dow points and 100 S&P, you didn't have 1,000-point moves and Dow points in the market. That was unheard of. And you saw what happened in March and April. You were getting 1,000-point. You were getting 100-point S&P bars in the hourly. It was unheard of. And even as far as the financial crisis in 08, that still did not happen. They had some big moves, maybe 1,000-point moves during the day, and that was huge then. Now you're getting 1,200, 1,500. So the volume is definitely trading a lot more recently than it ever has. So I don't know where you're getting your facts from, but I think your facts are. I think you need to go get some more sun out there in California, because I don't know where you're getting your facts from. But let me know. Oh, we'll quickly come down here to what happened here. Well, if you got short there again, of course we didn't get to 04 again. What a joke. How do you like that? Now I'd be a little bit tenuous. Careful here, the 04 So again, we said below 08. Remember, those are the keys. Sometimes you don't want to be long below 8. Who knew that 12, 13 area was going to be? The 12 area is going to be so good. Whatever happened was just a little bit of hiccup. They were only joking. Come right back up here. See, that's why it's hard to trade when it gets this way. Yeah. The only thing you could have done up here was try to get short there against the 13, 14 and see what happens. And then if we get above 14, I think we would rotate higher. But we never got above 14. Kind of stayed there for 10, 15 minutes. And I don't know what just happened. Somebody said something. And it created this little push to the downside. So, there is going to be a deal. It's not a matter of being optimistic. There is definitely going to be a deal. It's just a matter of the details. The details are in the pudding. Everybody's got different details are going to be, if they're more than that. But everybody's leaking the details out now, so it's not like it's going to be a big surprise. All right there, Dan. Take care. Mhm. All right, so again, we are down below there. Be careful there, but the O4, maybe look at O3 a little bit better, just because of what it just did. Again, you have to make adjustments, right? Nothing here is perfect, and you have to make adjustments to the market and what the market is telling you. Came right back up there to that little R11 and came back off again. So the pivot is working very good for you again, and you have your outs, you have your exit strategy. So if you're taking it, you know what you're risking. So it's been working out. If you're looking for this short, it's been working out okay for you. All right, we've gotten definitely a little range bound here. Again, the short there below 13, 14 area again worked very nicely if you were so inclined. Definitely, if we get above 14, I think the market rallies a little bit. At least go retest the high there at 17 and maybe a little bit higher. But looks like a little bit of a buy there, soon being set up there by the market. Again, the four area that we have here probably a little bit more tenuous now than it was a little while ago, since we went around there and tested it again and came back off. So I would say probably use three area, maybe a little bit better, maybe even two, all the way down to two, based on just a little bit of an adjustment. Um, Market is definitely range bound, very tight little ranges. They're waiting for something to be done or be concluded there in Washington, and then we'll see what happens from there. Bonds here breaking down a little bit, maybe thinking that they might rally these S&Ps. Sometimes yesterday that definitely was the case, where the bond market was leading a little bit, at least in the morning. Then kind of did their own thing in the afternoon when the FOMC results came out. Again, we are trading mini S&Ps, looking to scalp the market using price action. Question there, if you can learn anything from what we do. If you're an experienced trader and you need to add on some different concepts and ideas and ways of making money, this is where you learn different concepts and ideas. If you're trying to add to your repertoire of trades, I'm not gonna it's when I have traders, when I teach traders who have already been trading for a while, usually it means that we're adding new ideas and concepts to their repertoire and to their setups that they have, and maybe we adjust their setups a little. So maybe they tell me what they're using, and I like what they're using and adjust it to mine. Like I said, the group of traders, it's always good to share ideas and concepts with each other. I think that's how you become better traders. So that's where we're at. So if you have any questions in regards to anything that we do, as you can see, the market's definitely sucked out a lot of volatility here, and it's going to continue to do so as the week goes on, and especially into next week. And so keep that in mind as the market is getting lighter, and it makes sense. I mean, it is what it is. We are getting into December, getting in late December, getting next week's Christmas, so that's what's going to happen. It seems like, because bonds may be turning, maybe S&P's a little rally here. I don't know. Again, they got to get above the 14 area for them to pop up a little bit. We'll see if that happens. Otherwise, patience is very important. If I can teach you anything without having to do anything, as far as taking any, being patient and waiting for the opportunities to present themselves, is probably the most important thing that you can learn. It's something that is tough for me to learn. That was the one thing that I had to deal with the most, because I always wanted to trade and I couldn't. But you have to be patient and wait for the market to set something up for you to be able to make some money. And there's no reason to trade when you don't have to. Like I said, we're trying to also make sure we keep our commissions low. Last thing you want to do is give those brokerage houses more commissions, that's for sure. All right, so we'll see what happens. The bonds kind of been very active lately there in the bond market. It's good to see that they're moving around here a little bit. Nothing wrong with that. And again, if anybody has any questions, good time to ask. Ask about anything. And we got away with the snow here, so it's not so bad. Like I said, we just got a little dusting. It's not the worst. What would be the opening price time and the closing price time on the E-minis? Opening price, well, I don't know about what the opening time is because they do trade at night, so that's it's a little bit different than when their opening price would definitely be at night. The closing price would probably be at 3:30 Chicago time. That I can tell you. The opening price I think would be once they reopen there, which would be about they do open at 3:30, but then they close again. I think when they open it back up at 5 would be the opening price in the E-minis. So 3:30 is the closing, and again I think when they reopen, they close. They open. They shut down for an hour or so, and then reopen again, and that would be the opening price at that point.